I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Brendan Playford, CEO of Masa Finance. Brendan, welcome to the show and thank you for taking the time.
Hey Ashton, great to meet you. How are you having a good day?
Thank you very much. I'm excited to dive into Masa Finance and the DeFi solutions you're bringing to bring more financial inclusion into the world, something that is well needed. Let's kick off the conversation, Brendan, with just an overview of the solutions that your team is driving into finance, and then we will dive into those details.
Yeah, that's a really good question. So Masa, we're building a decentralized credit protocol and as we call it, an embedded lending platform. What we mean by that is we're creating a new infrastructure layer that bridges off-chain data and on-chain data to DeFi. So as people, like individuals or businesses, can connect their both traditional accounts if they have them and their on-chain accounts to create effectively a decentralized credit report. And then connecting that infrastructure layer with DeFi lenders, providers, and other sort of platforms in the space, and allowing developers or these businesses to launch credit products at scale that match the existing off-chain paradigm that we're used to. And we support about 10,000 data sources at the moment across 78 countries with integrations with Equifax, TransUnion, Plaid, and other bank connectors globally in the US, North America, Europe, South America, and also in Africa. And essentially with that infrastructure we built, we can effectively serve 2.9 billion people through partners in those markets.
Wow, incredible, Brendan. And yeah, credit scores on the blockchain are such an interesting concept to refine and to see how, as they mature, how it will compare to the old off-chain system. Because in pure DeFi, it's hard you have to build up a credit score, as you don't really have, it's possible to start doing it without giving out your personal information and all that kind of details. And you mentioned there just going into like a global market right away. I'm curious if you had some initial intention or to serve some initial group of people with this kind of solution.
Yeah, I think, the journey for this starts for me when I kind of moved to the US. I grew up in the UK in what was a very underserved area of the UK, an area called Norfolk, which is on the periphery of London and generally just doesn't have much access in that region. And I was fortunate mining cryptocurrency allowed me to, in early 2013, earn enough wealth to kind of get on my way out of where I grew up. But there's a lot of people globally that don't have that opportunity. And one of the things to kind of unlocking that journey to wealth is definitely credit. Being able to leverage wealth or capital beyond what you already have is really important, whether it's to get education, whether it's to build a business, whether it's to move to another area of higher economic opportunity. And what I found when I moved to the US, my existing financial history from the UK didn't follow me. And getting here, I was sort of back to ground zero. And that is not just isolated to immigrants. It's also the same for 3.3 billion people around the world don't have traditional access to credit. And even in the US, it's about 45 million are credit invisible. So started on this journey 4 years of understanding with another company of how can we process data, just traditional data for banks, to allow them to score, as we call them, thin file or credit invisible people. These are people that are otherwise credit worthy that don't have traditional data, and FICO may not serve well. And as we went through this, we sort of realized that by provisioning a credit bureau of sorts on chain that was owned by the individual and allowing that individual to connect to a range of data sources, we could open up an ecosystem that would allow a different type of lender to come in to serve those customers and serve individuals like myself or those people that are underserved in other emerging markets that are otherwise credit worthy. And to get to the promised land with allowing on-chain scoring, the time required to build an on-chain score from on-chain transactions, your addressable market is relatively small. It's small and focused on crypto natives, those that have high on-chain activity, and truly doesn't serve the mass market. So we really wanted to serve the mass market and create a financial infrastructure that allowed different incentives from non-banks where they wanted to lend to some of these segments. Like we build on Celo, for example, as well as Ethereum. And the mission of Celo is to really serve people that are in this kind of underserved bracket. And you can partner with a lot of like-minded funders to bring capital on chain for these individuals, so long as you have the infrastructure and the ability to build trust in the system.
Mm-hmm. Very interesting. And yeah, we've spoken with Celo, and I love their initiative in trying to bring that financial inclusion as well. And it's interesting that you mentioned there, in the UK and in the US as well, people often don't think that the more developed nations, there's a lot of people that still don't have proper access to credit. And you mentioned in the hybrid format where you're bringing that off-chain and those sort of credit scores and into the on-chain world. And right now, there's not a lot of people in the world that have a lot of on-chain information, data, history, where they can start getting access to these new kind of lending protocols and other access to capital. So maybe you can talk a little bit about people that, they're in a developed nation, they are still having trouble to get credit, as you mentioned. How do they first get involved and not have to learn the ABCs of blockchain to start getting that on-chain history so that they can get access to these new kinds of lending?
Yeah, so our approach was very user-centric, or is very user-centric. What I've experienced through my journey was using Credit Karma, specifically in the US context, to sign up and understand where I was on day one, and use that understanding to work through steps that were education based to understand how I could go from like a 550 credit score when I first started, or essentially a non-existent credit score, to maybe like a 700, 750 today, where I still don't have enough credit age to, for example, get a mortgage, but can get car financing. Got my first car financing just in December personally, after 6.5, 7 years of being here. So it takes a long time. So our approach has been to take what I experienced with knowing that it's a user-centric journey, to allow the individual to bring data that's native to their market into, into our ecosystem. So we almost have like a Credit Karma for DeFi-like interface. You can think of it that way, where when you sign up either through the mobile app or a web application, you connect whichever data sources are relevant to your market. So in Nigeria or Kenya, for example, we use a connection with another company I own called PingMe, and that allows us to pull and scrape data from the user's device. That can be transactional information from local mobile money services. It can be bank information where there's bank logins. It can also be device behavioral data, which actually is a very high predictor for credit worthiness. It can often be more accurate than FICO for a specific segment. And through that journey, at the end, we're starting to recommend partner loans, on-chain partner loans to those users. So kind of our wedge into the market is this Credit Karma-like experience, where we're putting the user at the center of the journey. So as the first experience of this DeFi world is one of value, and our hypothesis is that the value is understanding more about where you are today and how you can navigate your way to this end goal. Not just getting a loan, but that journey as you kind of go through it. And when we allow the user to connect those profiles, we're creating almost like a non-transferable NFT. It's like a multi-token NFT that allows us to encrypt off-chain data and link it to this kind of credit report identity, and constantly track that and keep it updated in real time.
Mm-hmm. Fascinating. And with people that are getting loans on chain, whether it's to start a business or to get a car loan, something like that, when people go on blockchain, they think, okay, I'm getting a loan in cryptocurrency or in stable coins of some sorts, and I don't really know, first of all, I'm new to buying cryptocurrency, but then how would I use that cryptocurrency to buy things with fiat currency? Is that on and off ramp? Is that an easy process for people that are new to blockchain as well?
Yeah, I mean, it's, I think of all these kind of picks and shovels companies that have been built over the years. Coming into the space really early on in 2013, I've really seen and experienced the different bits of infrastructure that have been built. One of those is these on and off ramps. And you have a significant number of integrations that you're able to use to provide those on and off ramps. Certainly in local markets, for example, the US and also like African markets or even LATAM, there is this class of companies that are like the Plaid for XYZ, the Plaid for Nigeria, the Plaid for Mexico, et cetera, et cetera. And if you're able to marry together someone's bank information, so allowing them to connect their bank account and verify it in the way that we do if we sign up for Venmo or another like PayPal type service, you're able to then make a connection to transfer funds from an on or off ramp into that user's account. And I would say that infrastructure is very, very well established. It's just a case of joining the dots between infrastructure that's in the CeFi space and infrastructure in more of the kind of crypto native space. Like DYOR does, pretty good payment linking and sort of payment infrastructure. And there's many other providers, including platforms both on Ethereum and in the Celo ecosystem as well.
Mm-hmm. Okay, good to know. And I'd like to get a better snapshot of where exactly Masa Finance is at right now. You mentioned at the beginning being able to serve billions of people, but it's a long path to get to that point.
Yeah.
So how long have you been working on this, and where exactly are you at right now?
Yeah. So our mission is to bring the first billion people to DeFi, and that's a very bold statement. And you've really got to demonstrate A, there's a market, and B, you can onboard these people like you're saying. So at the moment, we've been building in, I would say, a beta or a beta kind of iterative approach. We've had an Android app and a web app in sort of private beta for about 6 months. And we're just going through like a pretty big refactoring for scale. We've onboarded around 37,000 users at this point across multiple countries. And in addition to that, been building out 2 other additional things: a zero knowledge validator protocol, which is a little bit like a layer. I'm not even going to try and call it a layer 1 or a layer 2. It's a base layer that allows for private transactions of private smart contracts. So in order for us to link off-chain data on-chain, we have to we've built something similar to Chainlink, but one that obfuscates any of the transactional data that's going through it and only reveals it to 2 parties. We've used a forked version of a transaction manager and private transaction kind of enclave and built that out to our own spec. We have about 2,000 validators on that network at the moment from our community, which is really great. So we've been going through this like test, iterate, and learn process. And over the next month, we're going live with lenders and actual products. We're launching our own credit builder loan, which is kind of a random product, but it's for people. I used one of these when I first got to the US, and it really helped me get a loan and establish credit in a way that was reported back to a bureau so as I could get future credit. It's this weird chicken situation that without credit, you can't get credit. So providing this credit builder loan where essentially you're lent a certain amount of money that's actually held in a savings account. And as you pay the loan down, it matures at the end and you get a payout. So you're saving and building credit at the same time. So we're launching one of those ourselves where essentially we're saving someone's money in DeFi. They're getting yield on it. And at the same time, they're building up credit. And after that initial credit builder loan has matured, they'll then be able to access a larger loan. And in addition to that, we're positioning partners. We have about 10 to 12 partners coming onto the platform. They'll be putting a range of crypto mortgages, micro loans in certain countries into the app as if it's that Credit Karma-like experience. And that will be happening over the next sort of 4 to 8 weeks as we've refactored and rebuilt some things for scale after testing with this initial cohort of users.
Very cool and impressive traction so far just in the beta. I'm looking forward to seeing how that plays out. You mentioned there part of the next steps is getting more lending. I'm curious on the lending side, do you see, obviously there's a lot of people and demand for getting loans, but on the providing loan side, Do you see an influx of capital that will be flowing into Masa Finance to provide the capital for these people that need loans? And what is the incentivization for those people to lend out their capital?
Yeah, it's a really great question. So it kind of goes back to a comment I made at the beginning, which is today when you're looking at these segments, the banks generally don't want to serve them because it's considered, I wouldn't even say high risk. It's not even considered high risk. It's just out of the norm. And what I mean by that is they have built businesses lending to a specific segment for X number of years, and breaking that paradigm and pattern is just not what banks do. They move slowly and they stick with what they know. And they've been making a lot of money from this for a lot of years. So we've found that there's a specific bucket of capital available for a product. And what I mean by product is a specific loan product. So if you look at this credit builder loan, it's very, very low risk. If you're putting a product like this into the market where it's so low risk because essentially the loan is being escrowed, you just have everybody wanting to put capital in there if you've got some rate of return that's above a certain threshold. So if you're meeting or beating a certain threshold of return, capital flow. But in addition to that, you start finding that you're unlocking areas of capital that are more mission driven or aligned with impact. And essentially, because you're building a trust layer, those individuals are more comfortable provisioning capital. So these are non-bank institutions. These are, we're in early conversations with Goldfinch, for example, and Goldfinch is a fantastic platform. They provide debt facilities for lenders. And I think they've done well north of 100 million at this point. That was probably a few months ago. It's probably way exceeds that now. They provide loan facilities, things like people like Branch, for example, who do microloans in Kenya. So partnering with those people and institutional lenders. What I mean by institutional lenders, one of our investors, we have some of the founders or owners or people that started a fund called Golden Tree Asset Management. It's a $47 billion fund based out of New York. They provide the majority of the retail loan book capital for the US market. They're one of our investors, and they are helping us both structure products through the platform and understand how we tap into liquidity based on their desire to also enter the market as well. So what we see is a lot of sideline capital today. We see a lot of product specific capital where people have got comfortable coming from either retail or institutional investors. And then we have this sort of old school capital, which I don't think will ever necessarily enter the market, or they'll enter the market in 5 years into very low risk categories, and they'll probably miss the boat, which is the old banks. So yeah, plenty of capital there, but they're all looking for infrastructure to make them comfortable in their lending.
Mm-hmm. Very cool. Good to hear. And for people that are looking to follow along with the updates that you mentioned in the coming weeks, and people that need access to capital and they're looking to either build an on-chain credit score or just get a loan, what is the best way for people to learn more about Masa Finance?
Yeah, so you can dive onto our website, just masa.finance. It's going to be updated over the next month or so to a more sort of frilly website, but it's pretty simple right now. And on there, you'll see links to our Discord, our Twitter account, and Telegram. Discord and Telegram for sort of daily conversations. If you want to become a node operator, go and check out our GitHub and dive into Discord, into our validator channel. You'll be able to kind of get up and running there. We're also looking at hiring amazing people. I'm going to do a shameless plug here. We want to have somebody that's great at marketing and engineers as well. So check out our careers page or just email us at jobs@masa.finance as well. So Twitter, Telegram, Discord, and you can find all those links from the website if you go on there.
Awesome. And I will leave those links as well in the description box below. Thank you so much, Brendan, for coming.
Thank you very much.
Show. Really appreciate it. All the best with Masa Finance, and let's definitely follow up in the near future.
Cheers, Ashton. Thank you so much.